The US is entering a phase of jobless growth. That means the GDP of the country goes up without the jobs going up, only productivity. This should scare you. Now, why should you listen to me? I was mentored by the Institute of Trading and Portfolio Management ex Goldman Sachs traders Anton Creel and Edward Scheck, and the portfolio manager of Dragonstone Capital, based out of Singapore, managing $3 billion. In addition to that, I have completed multiple specializations and have also created my own algorithm which is running in the markets, which has generated me over a 7,500% return over the last 15 years, all of which you can find in the bio. The GDP of the US will increase because of productivity per capita. The US population is aging, and there is a serious immigration issue going on, obviously, where Trump is deporting people. Huge H-1B problem, too. So, you're getting a loss of workforce, skilled labor. You have AI productivity going up, an aging population. I mean, just look at these numbers. The labor supply growth is going to decrease drastically in the future. People are going to go out of jobs big time. This is happening. This is not fluff. This is very real. We have the labor market weakening while labor supply keeps going up. That's a huge mismatch. Apart from the healthcare sector, most job growth in the US is net negative right now. Companies in their earnings calls are openly admitting and openly saying that they are using AI actively to cut down labor costs. As you can see in this chart, the rate of companies actually mentioning it in their earnings call that they're gonna use AI to help mitigate labor costs has gone up exponentially since 2022. The people most affected by this is young tech workers. It's real and it's happening. Look at this chart. Since the release of ChatGPT in 2022 2023, the unemployment rate has spiked up big time. Big tech companies are increasingly adopting AI to make things more efficient, and unemployment rates are spiking up big time. The real kicker to all this is that AI's real damage actually shows up during recessions. Routine jobs get absolutely destroyed during recessions, and these jobs never come back. This is exactly what caused the 2001 jobless recovery. I mean, the jobless recovery that happened after 2001 took 2 years to return to its pre recession levels as they continued to just shed routine jobs. And again, in this chart, you can really see that during crisis and during severe equity downturns, routine occupations get absolutely smashed. And with the adoption of AI, you can only imagine what this is going to look like. It's going to look a lot worse. It's going to get totally smashed jobs completely. Guys, this is the reason why the Fed is consistently cutting rates. The Fed reads reports like these and sees figures like these, and it knows that what's going to happen in the future isn't too good for jobs. I used to think it was just some weird facade that AI is going to take over and people are going to lose their jobs completely. It's happening. I was watching a podcast of Sam Altman on the Joe Rogan show, and they're actually talking about things like distributing money globally to people who've actually lost their jobs. And Sam Altman believes those truck drivers and these guys, they're gonna lose their jobs completely, man. You need to hedge out and you need to reduce your exposure. Just to seek productivity, a lot of people are gonna lose their jobs, and it's really unfortunate. Now, you need to figure out how you can profit from this and stay afloat because it is a cutthroat world. So, guys, stay tuned and I'll be giving you more updates about the situation.